everyone, and welcome to today's video about investment diversification. Investing your money can be a great way to build wealth over time, but it's important to understand the risks involved. One of the most effective ways to manage risk when investing is through diversification. In this video, we'll be discussing what diversification is, why it's important, and how to create a diversified investment portfolio. Investment diversification is the process of spreading your investment funds across different types of assets, such as stocks, bonds, real estate, and commodities. The idea behind diversification is that by investing in a variety of assets, you can reduce the overall risk of your portfolio. This is because if one type of asset performs poorly, the other assets may perform well, offsetting the losses. There are several reasons why investment diversification is important. Firstly, it can help to reduce the overall risk of your portfolio. By investing in a variety of assets, you are less vulnerable to the ups and downs of any one particular asset class. Secondly, it can help to increase your returns over the long term. This is because different assets perform well at different times. So by investing in a variety of assets, you are more likely to capture some of the returns of each asset class. Now that we've covered what investment diversification is and why it's important, let's talk about how to create a diversified investment portfolio. There are several steps you can take to create a diversified portfolio. Step 1. Determine your investment goals and risk tolerance. Before you start investing, it's important to determine your investment goals and risk tolerance. Your investment goals will help you decide which assets to invest in, while your risk tolerance will help you determine how much risk you are comfortable taking on. Step 2. Choose a mix of asset classes. To create a diversified portfolio, you should choose a mix of asset classes, such as stocks, bonds, real estate, and commodities. Each asset class has different risk and return characteristics, so by investing in a variety of asset classes, you can reduce the overall risk of your portfolio. Step 3. Choose investments within each asset class. Once you've chosen your asset classes, you should choose investments within each asset class. For example, if you've decided to invest in stocks, you should choose stocks from different industries and sectors. Step 4. Monitor your portfolio. Finally, it's important to regularly monitor your portfolio to ensure that it remains diversified. Over time, some assets may perform better than others, which can cause your portfolio to become unbalanced. By regularly monitoring your portfolio and rebalancing it when necessary, you can ensure that it remains diversified. In conclusion, investment diversification is an important concept to understand when investing your money. By spreading your investment funds across different types of assets, you can reduce the overall risk of your portfolio and increase your returns over the long term. To create a diversified investment portfolio, you should determine your investment goals and risk tolerance. Choose a mix of asset classes. Choose investments within each asset class, and regularly monitor your portfolio. Thank you for watching this video. and we hope you found it helpful. If you found this video helpful or informative, please remember to show your support by liking, commenting, and subscribing to our channel. Thank you for watching.